What's good, everybody? Israel, not come back to another video. So this is what I'm going to show you guys a trading recap for Friday, July 10th. So just so you guys know in advance, this is a day where I did not take a trade. Now this is important because I was behind the computer because this is a trading day. This was a day where I'm supposed to be behind the charts, and I was there. However, the market did not deliver me a setup or what I was looking for, which is why I did not trade. So many traders love to show the trades that they take or why they took trades. However, there's very few traders who ever explain why they don't take trades or the days they shouldn't be trading. And that is equally as important, right? The days you trade versus the days you shouldn't, because that is what's ultimately going to allow you to succeed in these markets. And I want to continue showcasing my strategy and to explain to you guys the days why I do take trades and the days why I don't. And this is going to be a day where price did not deliver me what I was looking for, so I effectively sat on idle hands, and then I eventually stepped away once I realized it was time to walk away. So jumping right in, what we always do, we always look at Forex Factory. We always look at the USD currency, right? Because we're trading the NAS and the S&P. Those are, for like the US markets. And on Friday, July 10th, you see that there is no news, right? So there's nothing really for us to worry about. This is a trading day, so we're here, right, on the setup. So the very first thing we like to do is determine higher time frame bias. So we go on the 1 hour time frame and we determine where is price most likely to go. Is it higher or lower? Now, what I like to do is I like to look at both the S&P and the NAS side by side, because whichever pair provides me with the most recent structure, that is what I go with my bias for both pairs. Because it happens very like rarely, but sometimes there might be a situation where like NAS and S&P both have different biases, like off the charts alone. Like one will say bullish, another one will say bearish, but I use whichever one has the most recent structure, and then I keep that bias identical for both pairs, right? In this case, this day was pretty straightforward. So this day I had a bullish bias. Why is that? Because if you look at the S&P first, you'll see that this high right here gets traded past, it gets taken out here, right? And then price continues to go higher. Where does it go? Price eventually makes the high right here on this candle. Now, the candle makes a high right here. Where was the prior swing low prior to this high being made, right? Obviously, it was down here, right? So clearly, S&P is nowhere near being able to go lower and clear out that swing low. And this high that you're seeing right here does not get traded past with this candle, right? This high right here, if I put a ray, right, you can see this candle doesn't pass it. So we're looking from 8:30, from prior to 8:30. Whatever happened was the last market structure in the 1 hour time frame prior to 8:30, right? Because we want to see market structure hold, right? Now, if we look at the NAS, right, you had a high right here, and then price pushes up again and makes another high. So prior to this, the highest high that was made, where's the most recent swing low? Clear as day, it was this low right here. Why? Because this candle to the left and to the right are both higher than it, right? So this candle makes, it almost makes like a U, like an island by itself. So this was the most recent swing low. Obviously, price is in the middle. It's nowhere near this high or this low. So we know that price is bullish because we're expecting price to continue going higher, right, from this point on. So I'm approaching the session with a bullish bias. So now I will wait for 8:30. So this black candle right here is the 8:30, just like this candle right here. And I usually skip one more because sometimes the 8:30 candle is what makes the swing, right? So here, this last candle that formed is 8:45. So now this black candle is 8:30. So now we want to look to the left of 8:30 to see what is the most recent swing low prior to 8:30 on the 15-minute time frame that price can potentially purge, right? And clear as day, it is this level right here, right? Because this is the candle from 8:15 to 8:30. We look to the left, right? Obviously, it's this low right here that remained untouched. The same idea with the NAS, right? This bullish candle, this is the 8:30 candle, so to the left of 8:30, where's the most recent swing low? Right here. Why do we mark the swing low? Because we are bullish on price, which means we expect price to want to go lower, clear this low, right, before making its way back up and taking price higher, right? We want to take price, like, it's the same idea as buying low, selling high, right? If you're anticipating price to eventually go higher, it's much better for you to buy it low so that when price goes higher, you can sell for a profit. It's no different. Like if you bought a TV, right? And you expect the price of the TV to at one point be at sell at 1,000. If right now the price of the TVs are 700, it's better for you to wait for price to go to 500 to then buy it and then buy it at 500 and sell it for 1,000 than for you to buy it at 900 to then sell it for 1,000, right? Like that just makes most sense logically if you're looking to make a profit. So this is the idea with the market. Price has a tendency, if price wants to go higher, it has a tendency to make a push lower and then this before pushing higher. And the same idea vice versa. If you anticipate price to go lower, price has a tendency to want to push higher before making the actual push lower, right? So we have our lows marked out. Now let's mark some potential targets to take price. So this right here, this high is a very logical target because right now this is the high of the New York session. And we have a few targets right here. We obviously have this target, which is the high of the New York session. We have a high right here, which is the high of the London session, right? They're really close. So if you want to take this off and just keep this high, that's perfectly fine, right? But you have these two levels. Then, right, you also have another logical level of this high right here from afternoon session of New York yesterday, right? Because this is the highest, like this is immediately the highest high in like the last 24 hours, right? And then of course, right, you have what appears to be liquidity, right? These are the equal highs. These are what retail traders see as resistance, right? What retail traders see as resistance, we see as liquidity because we know that traders are entering here. Because the traders enter here, for example, traders enter here thinking support and resistance. Where are they going to put the stop loss? Either right above it, or they probably might put their stop loss right here, or they probably might put their stop loss above here, right? Like we know traders are trading there. It's obvious. So I can put array, and that can also be a target as well, right? So you're seeing already, this is what goes on in my mind as I'm setting up for the session, right? Because I have my bias, which is the direction that I want to take price. I'm bullish on price, which means I'm only looking to take buys. The button at the top left that shows buy and sell, right? I'm bullish, which means I'm only looking to buy. So that red button for this day does not exist. I'm only looking to push blue if the market gives me an opportunity to buy, right? It's the only reason when I'll do it. If not, then I'll leave it alone. But you're seeing how I'm beginning to set things up, right? You're also seeing this, right? You're also seeing a fair value gap right here, right? Remember, price is going after old highs, old lows, equal lows, and fair value gaps to balance itself out and rebalance, right? So you're seeing there's so much reason for price to want to go higher, right? Because there's so many pools of liquidity, there's so many, right? So this is how I'm forming, this is how I'm setting up my position even before I enter in a trade so that, if I were to enter a trade, right, let's say I'm taking a long, right? Let's say I'll take a long here. If price were to give me something, right, then this is already what I'm thinking to do something like this, right? Before the trade actually plays out. So this is what's going on in my mind. And the same idea with if I look at the S&P, right? So the S&P, we have other targets right here. We have a high over there, which is really close, and then you can look further back if you want any more targets. But to me, these are all, excuse me, these are all the immediate targets that are available. So now if I were to go back onto the charts, right, this is already we're already past 8:30, right? So now I'm just going to allow price to play out. So this aggressive move here, this was like a red news that happened, like there's like the Donald Trump news with Iran, whatever. So like these are like the random red folder news that happened. So that's why this candle is just so aggressive. But still, it doesn't change my bias. I'm looking with a bullish bias. So now I just basically watch price. I let price play out and I watch price. So you're seeing for the most part, price is still in this range from this high to this low, and the same idea here from this high to this low. Price is just consolidating in this range, and I'm seeing that NAS is working its way down, right? The NAS 100 is getting closer to our point of interest, which is sell side liquidity, and that's what we want to see. We want to see price go lower, right? Clear this liquidity, and then so that we could take price higher, right? That's what we're looking for. But however, for the S&P, we're seeing that it's kind of just consolidating, hovering in the middle. So right now, if we were to look at these two pairs, it is most probable for the NAS to potentially give us a setup because it is closer to the bottom and there are significantly more targets to the upside. So there's more reason if price went lower and wanted to push up, there's more reason for price to now want to go higher. So between these two pairs as they are right now, as it stands, I am leaning more towards the NAS to want to take that as a trade, right? So now we're gonna keep going. And then as you can see, right, this big aggressive bullish candle on both sides, right? This big aggressive bullish candle, this was the 930 open. Now, what happened with the 930 open? The 930 open for the S&P cleared both of the liquidity pools, right? It cleared the liquidity pool with the high of the day, which was, that news event that happened, and it also cleared this other liquidity pool, which was a previous high. So pretty much the two main targets that we had planned for the day immediately gets taken within the first minute or two of the session. The same idea if we look at the NAS 100. This big candle right here, this is the 930 open. As you can see, right? Price was aggressively bullish and then price took out the high of the day and it took out the other, well, this high right here, which was the high of the London session. So you clear the high of New York and the high of the London, and you're getting close to closing up another fair value gap. So literally right here within the first 2 minutes of my training session, because my training session is from 9:30 a.m. Eastern to 11 a.m. Eastern, that 1.5 hour window. So 1 to 2 minutes into the session, price aggressively pushed up and cleared our targets. So for me at this point, I close trading view and I walk away. I'm done because the targets were taken. If you were planning to take price to these levels, price already went up and went to these levels. Price cleared the liquidity from these levels. So that tells me it most likely doesn't want to go down anymore. It probably wants to continue going up. And if price does eventually go down and clear the sell side liquidity, it goes to our point of interest, it's going to be a much lower probability that it would want to push back higher again because these targets up here already got taken, right? So if we press play, you see that price, you know, obviously price eventually continues going up, further higher with the NAS and the S&P, clears additional targets, right? You get the idea. So price eventually goes up, clears the targets. The same idea with the NAS. Price eventually clears the targets, hit the fair value gap, goes back down, clears some liquidity, pushes back up, clears additional targets, right? So I'm just telling you, 2-3 minutes into the trading session, I was done. There's nothing for me to do because I know that price usually at the 9:30 open, it has a tendency to go in the opposite direction of where it truly wants to go, to trick traders to chase it to then take it where it wants to go, right? And price didn't do that on this day. Price just went up and cleared the targets. So because price didn't give me what I'm looking for, I'm not going to trade it. Now, as you can see, right, where price is at right now, eventually there was an aggressive move down that, you know, purged the liquidity. And look at this massive wick, right? Look at this massive wick. The same idea here, massive wicks to then do what? To then price, to then begin pushing up and then go higher and higher and higher, right? You're seeing it now. Let me put it on the 5 minute time frame to kind of like speed it up for you guys, right? The price just takes off and goes higher and higher and higher, right? So this is what I mean, right? Like I say all this so that you guys can be aware of the game that's being played, right? Price has this tendency. If price wants to go higher, it typically makes a push lower before going higher. And if knowing this, if we just see price at the 9:30 open, just open up and take off without capturing the sell side liquidity, without entering our point of interest, then we just let price go. That's what my strategy. Other people will still, trade for value gaps and just if price is moving, they'll still take trades. Cool. For me, I'm not interested in that. For me, I want to take price. If I'm bullish on price, I want to take price on a buy from the lowest point that it makes. And the same idea vice versa, right? As you can see, price went down and it entered our point of interest, right? It cleared this liquidity, right, on both pairs. And then what happens after that? Price explodes up. It explodes up. So this point of interest is not just like a random point of interest. It's like we do this because price has this habit and this behavior of doing this. Price has a habit of clearing liquidity before moving, clearing liquidity in the opposite direction before moving where it wants to go. And that's more proof. And this is why, like I continue to say, this is why market structure, you can't just trade based off of market structure alone, because we were bullish on price. So we were bullish on price, and what happens when price opens up? Price goes up, right? Price goes up, cool, is bullish. Now, because we're bullish on price, what do you think traders were thinking? If there's traders who were just trading market structure, right? They're probably looking at this and saying, okay, well, clearly, right? Clearly, price is bullish. So if price is bullish, then that means I could take a long, put my stop loss under this low, and then target these highs. Why would some traders be thinking that? Because if they only trade market structure, they'll be thinking that if price, like price has to respect this low because this is structure, right? This is the last low before this aggressive move up. So some traders are thinking that price has to respect this level based on structure. But then what happens? Price completely obliterates that. It clears not only this low, it also clears the liquidity down here, right? So any traders that were in on buy positions, right? They got taken out. Think about the traders who were trendline traders, the traders who seen this and told themselves, look, one tap, two tap, three taps on the trend line, right? So they're probably seeing this and thinking, okay, price is gonna tap this trend line, is gonna hold, and then it doesn't because price takes everybody out, right? This is why trendline trading isn't the answer either, right? But I'm showing you this to show you why market structure alone isn't going to get the job done, because price is hunting liquidity. It's going to disrespect all market structure rules, right? This is based on market structure. This is supposed to hold because price is bullish, right? So you would expect this low to hold, because if price breaks under this low, then you expect to be bearish, and price breaks under this low. Now, if let's just say you took a loss because you're trading market structure and you see this low now get taken, right? You're probably thinking, okay, price is now bearish because price came down, cleared the low. So now price is definitely bearish. So since price is bearish, it's not supposed to break this high. So let's just say you decide to take a sell somewhere over here. You put your stop loss above that high, right? And now you're telling yourself price is supposed to make its way down because price broke structure to the downside. Well, if you were to take a sell somewhere around this level, excuse me, with your stop loss above this high, right? At this high, you will soon realize that you would take a loss, because price was never bearish, price was always bullish, even when it disrespected and went against all market structure rules. This is why market structure alone is not the answer. This is why you have to trade with the lens of liquidity and the lens of manipulation, and like, because this is the market. The market is after liquidity. The market is on the hunt. And it's the same idea with the NAS 100, right? If you look at the NAS, price was going up and up and up. So if you were to take a buy, right? Sorry, if you were to take a buy, same idea here, right? You just take a buy some over here, stop loss under this low because you're expecting market structure to continue going higher, and then you see, you know, price just obliterates this low and this low, right? Like it just wicks under, and it does that because it's activating orders. It is activating the traders who have sell stops, the large institutions that put sell stops on these lows because they anticipate if price goes on these lows that price is going to continue going lower. Price activates those selling orders, and it also takes out anybody who bought early. It completely wicks out those traders, right? So then if you took a stop, if you took a loss here, then you're probably thinking, okay, price is now bearish because, market structure is telling me that it blasted lower, and then you try to take a sell up here, and then you will get stopped out again because price was never bearish, price was always bullish. Now if we go into the 1 minute time frame, now once again, right, my trading window is from 9:30 to 11, right? But if you notice here, right, what happens here? fair value gap gets tapped, right? And this is one of the few fair value gap. Now, of course, you eventually see a fair value gap up here, right? It's like a tiny one, but like this obvious fair value gap eventually gets traded into, right? Same idea right here. This is the most obvious fair value gap that is closest to the bottom. That price comes in and it might be a little hard to see, but it actually taps into this gap here and then takes off. This is where the explosion of a move happens, right? So you're seeing it's like these areas are magnets. Price will move away from it, and if it's left wide open like this, price has a very high tendency and probably to want to go in and trade into this level before taking off again. Same idea here on the Nas. Price goes up, comes down, and taps into it. So once again, like I said, I didn't take a trade on this day because price went up and cleared my targets before entering my point of interest, which is this liquidity pool down here, right? Before targeting the sell side liquidity. However, price eventually reverses, takes out the sell side liquidity, and then after it takes out the sell side liquidity, you see that out of nowhere, price is just going bullish, and because it didn't go lower to break structure and to go lower, it went lower to activate orders to then take it higher, right? So that's the game of price. That is what price has a tendency of doing. That is why we trade the way we do. Whereas if we expect price to be bullish and we want price to go higher, we want to see it dip lower into a point of interest, into some sort of liquidity pool first, because once it has that, it's activating orders and then it wants to take price in the opposite direction. So the reason why this is powerful for you to understand, and I'm going to showcase it over and over and over, is because until you understand this, there is a high probability that you're going to continue getting burned in this market, because in my opinion, trendline trading isn't the answer. Support and resistance trading isn't the answer, nor is indicator trading, right? It is, to me, the answer is price action. And you can only understand this if you decide to pay attention and learn and try to absorb this information and accept this as the truth, because this is in fact the truth. This is what's happening over and over and over. And I'm showing you proof of this happening day in and day out, right? And I'm showing you proof of us when we have a bias that price, has a high probability and tendency to end up going in that direction. So if we're able to accurately determine the bias most of the days, and determining the higher time frame bias is 80% of the work, because remember, if we're correct on our bias, price has a tendency to travel pretty far in that direction. So then it just becomes a game of just waiting for your confirmation to be met and for price to give you that entry, and you to take the entry, because based on the history and the evidence that you have from all these videos, that price is typically going to aggressively move in that direction. And so you can expect to catch larger moves and have larger wins because you are trading in alignment with the higher time frame bias. So this is why you just want to be patient, and you just want to wait for price to give you what you're looking for, because you know that when it does, it has a high probability to work out in your favor, and a high probability for you to get like a mega win. Like, just imagine if we put on like the 5 minute time frame, right? Like, once again, um didn't take a trade, but obviously if you were to, like, if this was a setup right here, right, like, you can see that it ends up delivering pretty well, right? Same idea with this entry right here. Like, price taps into the fair value gap on both sides and then just takes off, right? That's what happens. This is a normal occurrence, and I'm just showcasing this to you. um but I'm just highlighting what's really important is for you to see with your own eyes, right? Like, that this purge, this is what normally happens, of price taking out traders on one side to then push price in the opposite direction, right? Most traders would see this aggressive move down and think price is bearish and want to take it lower, and then they'll find themselves on the wrong side of the market. But we came in with the bullish bias, and price effectively did what we expected as far as it being bullish, right? It did what we anticipated. So that wraps up the video. Enjoy the video. Do leave a like and subscribe as you're on the road to me subscriber, guys. I'm also highlighting that I'm also have training view. Like, as you can see, today is Monday, July 13th, and I just wrapped up the training day for that. And so I'm going to record the trading video for that as well. So stay tuned for that to get posted, because that is also a very interesting setup, and you're going to learn a lot from that video too. So once again, guys, this is Joel, and I'm out. I'll see you guys for the next video.